Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation with the top management of HCLTech. Remember, the Q3 numbers have come in stronger than the expectations of the D Street. We've also seen even as the new wage norms have pushed up the costs and raised the concerns over profitability and margins, there's been a considerable beat on the revenue estimates this time around. The company has lowered the upper band of the full year growth guidance, but the CC guidance has actually been revised on the upward end as well. There's been a dividend announcement as well. So let's get straight into the key numbers and try and find out what's the outlook as far as the tech space is concerned. Let me welcome on board Mr. Shiv Walia, the CFO of HCLTech. Warm welcome to you, sir. Good to have you with us. Also with us is Mr. Ram Sundarajan, the Chief People's Officer of HCLTech. Welcome to both of you. Again, very good congratulations on presenting this strong set of numbers. A lot of seasonal factors helping you out there, but despite the challenges of the wage code, you managed to post strong set of numbers. So let me kickstart by understanding from you, Mr. Walia, what really moved the needle for you this time around?
So it's an all-round performance. Yes, this is a seasonally strong quarter for us for the software side, but in the services side, we had a good numbers, 1.8% CC growth and 5% year-on-year. So yes, that and along with good performance on the utilization front, all those factors helped us to deliver good results this quarter.
Absolutely. Let me also get Mr. Sundarajan right here. I think the big talking point this time around is on the impact of the new labor code and the impact of that has been seen on profitability, on margins as well. Could you elaborate on that impact as well and give us an understanding of whether this will be seen as a one-off for Q3? Will there be some impact that will be seen in Q4 and the subsequent quarters as well?
Yes. Firstly, good morning, Sakshi, to you and all your viewers. So far as the impact is concerned, I think we have already factored in whatever is the impact. It's all the approvals that we need to make for the past period, both in terms of gratuity and leave provisions and so forth, which we have taken. On an ongoing basis, we don't expect the impact to be anything significant.
So just to add, Sakshi, on the restructuring cost front, as we guided last quarter, the impact is going to be around 50 basis point for the full year. This quarter was around 80 basis point. We expect a similar impact in next quarter also. It's our endeavor to complete this exercise next quarter and start the next year with a clean slate. So as I said, overall, the impact is going to be around 50 basis point for the full year. And as Ram mentioned, labor code, we have taken a one-time charge this quarter. And going forward, it's going to be around 10 to, at best, maybe 20 basis point impact on a recurring basis.
Right. Mr. Walia, could you also help us understand, when we have seen a revision on the guidance front as well, what is it based on? Is it just general conservativeness that you are displaying when you've lowered the upper band there? What are the key concerns that have led you to, shrink this just mildly on the upper end, sir?
No, sorry, I missed the question because there was some disturbance. Could you please repeat this question, your question, please, Sakshi?
Absolutely, sir. Mr. Walia, I wanted to ask you on the revision on the guidance front, what are the factors that have led you to do the same?
We have a two consecutive quarters with strong performance, both on the services side and on the software side. Yes, we had a softer quarters Q1 and Q2, and this quarter is really did well, and on the back of that, we have a good booking quarter, 3 billion on the back of 2.5 billion plus booking we did in last quarter. So I think, yes, you can see the numbers we have delivered so far. So that's why we felt that maybe it's better to, it makes sense to increase the guidance for the full year. For the services, 4.75 to 5.25. And at an overall level, 4 to 4.5%.
Okay. Could you also give me a sense, Mr. Walia, I'll come to Mr. Sundarajan in a bit. I just wanted to also prod a little bit on the margin front and try to understand How long will it really take you to go back to the erstwhile 19% plus kind of margins? What are the factors that are still keeping the margins in this current band, and will we have to wait for some more quarters there?
Yeah. So if you take out the impact of restructuring cost, we had in this quarter, so 18.6%, that is around 19.4%, which is quite similar to last year, the margins we had. So that way, I think all I can say that, structurally, there is no issues with the margin, and we are quite confident as we get into the next year, and hopefully restructuring cost is also going to be behind us. So yeah, we will give the exact guidance, in April for the next year, but we feel confident about coming back to, our usual range of 18 to 19%.
Okay. Mr. Sundararajan, coming to you, and I wanted to understand when it comes to the hiring, the attrition, what are the trends that have really shaped up this quarter, and going forward from here, what do we expect?
So, Sakshi, in terms of our hiring, I think our hiring numbers are steady quarter on quarter. Even this quarter, if you see, we reported more than 2,800 fresher addition.
Yeah.
So year to date, if we look at our freshers intake, which is more than 10,000, which in the same period last year, if you compare, it's about 6,000. So there's a 40% increase in that. Even on a full year basis, what we delivered last year was just shy of 8,000. We have even beaten that in the first 3 quarters, and we'll add more in the fourth quarter as well. So far as our hiring is concerned at the entry level, we are on track to meet the plans that we set out for this year, and that trend is likely to continue quarter on quarter. So hence overall attrition as well, if you look at this quarter at 12.4%, it's one of the lowest in the last several quarters. We expect this to be steady around this 12 to 13% attrition level. So I think both on attrition front as well as on hiring front, we are quite steady, and this trend should continue.
Okay. Mr. Sundararajan, one more point before I go back to Mr. Walia, especially on the hiring front. This time around, there has been a significant surge in contribution from the AI space as well. I'll come to Mr. Walia to understand a little bit more on that. But specifically to cater to that kind of a demand that is emerging in the AI space, give us an understanding of how are you redesigning entry-level roles to fit into the advanced AI robotics kind of a demand that's emerging, and will this be your core focus area?
So absolutely, yes. As you see, our AI revenues that we are starting to report on, it's a steady increase. Even this quarter, our AI revenues have increased by 20%. So we have to ensure that our talent base is also geared up to cater to that kind of a growth. So far as getting ready to service the AI demand, yes, recruiting is going to be one part of it, and entry-level recruiting will certainly contribute to that. 2 quarters back, we talked about creating an elite engineer cadre through our campus program. Clearly, that is gaining momentum. That's going to be one channel through which we will add talent to service AI demand. Internally, reskilling and upskilling people is also a big investment area. If you look at our reskilling efforts to get our existing employees to gear up to servicing our customers on AI demand, that's quite significant. More than 150,000 people have been now upskilled on AI, and we are approaching that as AI literacy is something that we say it's open for all. It's effectively an open enrollment program that everybody goes through. And advanced AI skilling is something that we are doing for targeted cohorts based on what type of work that needs to be done, whether it is physical AI or robotics or advanced AI areas that we are focusing on. We have targeted cohorts for which we are investing in upskilling efforts. So it's going to be a combination of both what we do on the recruiting front and what we do on training and upskilling front. And what we have done in the last 3-4 quarters, we will be able to continue that momentum, and that should help us going forward.
Absolutely. Mr. Walia, could you give us a sense on the discretionary spends, the client focus on the AI space going forward from here in the last quarter of the current fiscal year and into the new fiscal year as well? What are the big expectations on the AI space?
So I think there is some specific area. It's not that in general discretionary spend is back, but in specific pockets, what we see, I think CVK talked about this yesterday in his briefing call. In specific pockets, it's there, and it depends on the skill sets you have, and especially in the data centers, all those spaces in all the hyperscalers, they are spending, and that's the demand is there. But in general, it may not be there. It is coming back in pockets.
It is coming back in pockets. Give us an understanding on the acquisitions front, sir, as well. What is the company's acquisition strategy given the recent activity that we have been seeing as well? And what kind of expectations can we draw in the last quarter as well?
So all the three acquisitions which we announced, we expect those to be complete by the end of in next quarter, and hopefully we'll have the revenue coming in from those acquisitions next year. But in general, I think we are open for some tuck-in kind of investments. As such, we don't have any specific plans, but we are looking out, and if to either the locational mismatch or as well as some skill sets kind of acquisition, we are open for that.
Absolutely. Give us an understanding, Mr. Walia, on the TCVs. You've done it strong this time around as well. Is it a broad-based momentum? Are you drawing still from the mega deals that you've hit in the past? What is it that we can expect, sir?
So this time, it was a broad-based booking we have done. Yes, there is one large deal which we announced, around 473 million in a retail space. But otherwise, it's a broad base in retail, financial services, also good booking. Especially in geo-wise, I think US, led by the US as well as Europe, bit soft in the healthcare sector. Otherwise, it's a broad base booking we have done this quarter.
Okay. Also wanted to ask you on the key verticals, sir. What is going to be driving your growth going forward from here? We've still seen some weakness in life sciences and healthcare, but your services and the product space has done well. How would you really look at what is going to be the key growth driving factor?
So for us, the financial services, obviously, if you take out the impact of seasonality, the furloughs impact, yes, this quarter was soft, but year on year, it's I think 8% growth, and also the tech vertical is also really doing good. There's a growth in manufacturing also, but still, I won't say, I will call it out a broad-based recovery in that sector. But otherwise, I think almost all the verticals are doing well, except maybe, as I said, healthcare, life sciences and healthcare is like still soft.
Okay. One last question to Mr. Sundarajan also before we let you both go, and that's as far as the continued focus on GCCs is concerned. Do you think the rise of GCCs is affecting the outsourcing opportunities? Are you looking at it carefully? Is that something that you're watching out for cautiously at this point?
Yeah, we absolutely pay attention to what's happening in the market. We have to do that. We need to scan the external environment. Right now, we do participate with more than 200 of our customers where they have GCC interest, and we participate and support them, and that does give us opportunity. There will be increased competition when GCCs are trying to set up their own centers. There will be competition, and competition is always there. So we don't see any immediate downtrend because of that, but we actively participate in the opportunities that come through in the GCC setup as well. We'll be on the lookout for what's happening, both opportunities and in terms of competition.
Okay. Well, all the very best. Yes, Mr. Walia, please continue.
No, that's okay. Thank you.
All right. Thank you so much, Mr. Walia, and thank you so much, Mr. Sundarajan, for being with us. All the very best to you for the upcoming quarter as well, and may this, continued momentum even take you to higher heights going forward from here. Thank you so much for being with us.
Thank you. Thank you.
All right, viewers, we'll wrap it up on that note as far as the exclusive conversation with the top management of HCLTech is concerned. Do stay with us on Business Today Television. Lot more coming up on your screens now.